Hi, welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're diving into the world of indexed universal life insurance, or IULs, and exploring the risks associated with them. Now, if you're considering an IUL for privatized banking, you need to know what you're up against, because here's the kicker. How IULs are marketed and what they really are can be vastly different. There's more to IULs than being able to put in unlimited funds when you need the money, and then you can borrow at favorable rates later and pay no taxes. There's actually a lot more. And if you don't understand the risks, you may end up with a policy that doesn't keep up with inflation, the cost of insurance, and it may actually lapse in the future.
Yeah, Michelle, the way they're marketed, you'd think it'd be a new insurance product, but they're not. Sure. IULs have been around for well over 100 years, and they're backed by some of the highest rated insurance companies today.
Yes, they are. And just let's go into the marketing here real quick. They're marketed as like under different names, I should say, such as like the Super Roth IRA, right? Or, bank on yourself, or tax-free retirement account. It's otherwise known as a TFRA, right? Tax-free retirement accounts. So they're marketed under quite sexy terms that, get you to look, get you to pay attention.
It's marketing, remember?
Right.
And it's funny. You'll often hear these plugged after the hook. 401ks are a scam. Yeah. It's something like I seen some titles the other day. Dump your 401k before it becomes a 201k. Is your 401k outdated? Get better returns than a 401k. Or This one was a good one. Why settle for ordinary 401k savings? Get tax-free benefits and superior growth. That kind of sort of thing. All I know is if I wrote that, SEC would be all over me. So, but just saying.
Right.
And the latest thing I've seen is IUL policies marketed as, you're supposed to use life insurance while you're alive.
Yeah, well, that and like bank on yourself, or, don't have your 401k become a 201k would definitely get my attention.
Yeah. I have to say, though, the marketing around IULs is effective. There's no denying that. There was a recent email I got about IULs, and the headline read, "Would you get on a plane you knew had a 50% chance of crashing?"
Wow.
You may be riding that right now.
No drama there.
Anyways, yeah, it makes you open the email, whatever it may be, Yeah. The problem is, Michelle, is that IULs aren't what they're marketed to be. And there are a lot of downside factors to consider, which isn't always covered in the marketing.
Like, give us some examples of those downside factors.
Okay, think about the commission and the fees that are inside these products. They're insane. Mm-hmm. And the amount of monthly premiums can be crazy high.
Sure.
Here's the deal. IUL, to me, in my opinion, IULs are made for 1 in 100 people, but they're sold to everyone. This is why there are so many class action lawsuits going on right now and over the last 10 years. I won't mention all the insurance company names here, but you can easily find all these lawsuits on Google search right now. So.
Okay. All right, let's back it up a little bit and make sure that we're all clear on what an IUL is. So what exactly is index life insurance, and how does it work?
Okay. First thing to understand is index universal life is a type of permanent life insurance, which means it has a cash value component to it in addition to a death benefit.
Okay.
So in a standard universal life policy, the cash account balance is guaranteed to grow at an interest rate based on either the current market or a minimum interest rate, whichever's higher. When you make your IUL premium payments, a portion is taken for the cost of the insurance. Now, remember, I said cost of insurance. You're going to hear that mentioned multiple times through this video, so stay tuned. Also, any fees or expenses that the insurance company may charge, and the rest goes towards a chosen index or indexes that you get to choose, or your insurer choose that year for growth. Let's say like the Dow or the S&P 500 or the NASDAQ. Okay. So each year, if the indexes are up in value, you receive a positive gain in your cash value up to whatever your cap or your participation rate may be inside that policy, minus any insurance expenses.
Oh.
If the indexes are negative, you incur no loss of your cash value, but the insurance charges still come out. If you don't have any cash values left, you may have to increase your premiums to cover these costs or risk the policy lapsing, like you mentioned earlier.
Got it. So whatever happens, whether it's up or down, it's minus any insurance expenses.
Oh,
So
yeah,
this
them
is how it
expenses will
compares.
always come out.
Okay, got it. All right. So because it's universal, do IULs do IUL like insure it? Does IUL people that hold IULs have the option that allow you to change things like the amount you pay for insurance, your death benefits, and how much cash value you want?
Yeah, they do. Universal life insurance offers flexibility,
Sure.
meaning you have the ability to adjust your premiums and your coverage amounts. Now, you won't be able to increase your coverage amount, say going from $100,000 policy to a $250,000
Sure.
policy, without the company maybe doing some more medical underwriting.
Got it. Okay. All right. So let's dive deeper into the risks. Specifically, what are people sold versus what an IUL really is?
Okay. Many IULs are marketed as a way to benefit from the stock market without losing money. However, there's some negative aspects to these policies. With an IUL policy, we mentioned earlier, the premium is flexible,
Sure.
meaning you can pay late or less than the full amount without it affecting your policy.
Huh.
There's a rising cost of insurance. It's called a COI every year. And this eats away at the premium you pay. The remaining amount goes towards the cash value of the policy, which grows based on an index like the S&P 500. If the index there does well, you earn a high interest rate. But if it performs poorly or it's negative for the year, you won't go negative. So that's one downside protection for you. But if the cost of insurance is rising on an annual basis, the amount goes towards the cash value, lowers each year.
Okay. Interesting. Okay. So you said that because your premium is flexible, you can pay late or less without affecting your policy. So how does this work? And what happens if you can't make a payment 1 month?
Great question. What happens is the insurance company subtracts the premiums from your cash values until there's no cash values left. Then right before that, they will send you a letter letting you know you will owe more premiums or the policy is going to lapse in the near future.
Got it. Okay. So what other risks do people need to be aware of?
One of the other problems with IULs is there's no guarantees. For example, the premiums aren't guaranteed and the insurance company can raise them. It's written inside the contract. Also, if the cash value doesn't grow enough to cover the rising cost of insurance, you may have to pay additional premiums to keep the policy in force. This can have a huge effect in your later years when you're close to needing the policy, to pay out to your beneficiaries, right?
Huh.
So I've seen many policies being canceled as the cash value has run out and the consumer can no longer afford the higher premiums.
Right.
Yeah, so it's very common. Also, the cash value is not guaranteed. Although there's a guaranteed minimum crediting rate, if it's 0, your cash value won't grow. If it's 2%, but the internal cost of the insurance are 2.5%, your net growth is negative, meaning you're still losing money. So also, if you choose indexes that are negative for like 3 years in a row, your cash value is going to deplete rather quickly to cover the cost of insurance each year, not the market losses as you have a floor there.
Got it. Oh boy. All right. So what if there's not enough money to keep the policy going?
If there's not enough money to keep the policy going, the insurance company will tell you. They have to give you a report every year that tells you your important information about your policy. This report includes how much money your heirs will get if you pass away and how much money you can get if you cancel the policy today.
Okay.
Make sure you read this report carefully and ask questions if you don't understand something. And my advice to you is don't pick up the phone and call the agent that sold you the policy.
Yeah, call the company directly, right?
Yeah, call the insurance company directly. There's a 75% chance that agent's no longer in the business.
Sure.
But what you want to do is sometimes a report will show you a picture. It's called an illustration of what the policy will look like in the future. If it doesn't, you can call the insurance company to get you one for free. This shows you right now, today, how your policy is doing and what might happen in the future. You should check this each year and ask the insurance company how much money you need to pay to keep the policy going until you want it to the end. This way you can find out if there's not enough money to keep the policy going early and you can fix the problem or find other options.
Okay, so quick question for you. So let's say that this becomes I have an IUL, it becomes way too expensive for me
Mhm.
to pay. That means that everything that I had paid in was for nothing. Or is there
If the
a
policy
value?
lapses and you have no cash value, yeah, your policy is going to terminate with
That's it.
no values back to you.
Okay, but if I did have some sort of cash value, I might
They
be
could
able to
come
get
back to
some
you.
of that out. Okay.
Yes.
Yikes. Okay, well now I see why they are not all they're cracked up to be. It's a little bit almost a bait and switch. There's a lot more to it than
There's a lot more to it. To me, they're a custom product. Would
sure.
I buy one? Yes, I would buy one specifically for one specific reason.
Right.
If I was going to sell my business in the future, I could underfund a policy in the early years. And as I get to selling my business, I can convert that sell of the business into that cash value and jump it up to the amount that I was allowed to put into the policy on a tax-free basis.
Sure.
But that's, again, them
Even
are
then, that's a
highly
gamble.
customable products.
Yeah, for sure.
They're
Okay.
not made for everyone.
No, they're not. What you said at the beginning, they're made for 1 out of 100 people, and they are custom. All right.
Right.
Here's the thing. If you like the content of this video, if you've made it this far, sexy conversation about IULs, hit that like button, subscribe. We've got a boatload of videos. Brian and I are putting out videos on the daily that help you make better financial choices for your future. So go check those out. And Brian, anything else? I think we've covered it, really.
Yeah, just be careful with them. I mean, but they are good policies for the right person and for the right objective and goals.
Right. All right. Well, thank you so much, Brian, for this. And thanks to everyone who watched.
Thanks, everyone. Have a great day.